probably heard Bitcoin called digital gold, right? It's this whole system, this mathematical marvel, designed from the ground up to be scarce. But here's a wild thought. What happens if that system just breaks? I mean, what if this digital asset we all know faces a complete, total collapse? $100. Just let that sink in for a second. Imagine a single Bitcoin, a thing that was worth tens of thousands of dollars, suddenly worth less than a fancy steak dinner. We're not just talking about a bad day on the market here. No, this is a thought experiment that stretches the very idea of value to its absolute breaking point.
So that's really the core question we're digging into in this explainer. We are about to walk through a scenario so extreme, it forces you to question everything you think you know about trust in technology. And this whole idea, it's got a name, the extinction hypothesis.
And let's be super clear. For something to fall that far, we need way more than just a bit of bad market news. The extinction hypothesis isn't about a dip. It's about a catastrophic systemic failure. We're talking about the very foundations crumbling, a scenario where the entire model, the whole idea, is suddenly up for debate.
All right, so let's get into it. How on earth could something like this actually happen? Well, it turns out there are basically 3 different roads that could lead to this financial apocalypse. So this is basically our roadmap to ruin, if you will. You can think of these as 3 different flavors of disaster. One that comes from the inside, one from the outside, and one that's purely economic. Let's break them down one by one.
First up, the technical death. Okay, this is the ultimate insider threat. Just picture this. A quantum computer comes along that's so powerful, it just shatters Bitcoin's encryption. In a single moment, its biggest selling point, that rock-solid security, becomes its Achilles heel. The code is broken. Trust? Poof. Gone. Then you've got state strangulation. This is the threat from the outside looking in. Imagine all the major getting together and just saying, nope, owning or trading Bitcoin is now illegal. Suddenly, it's kicked out of the entire global financial system. It becomes this digital outcast, completely useless as money or a store of value. And last, we have the miner's drought. This is the economic death spiral. See, Bitcoin's whole security system depends on this huge network of miners. But if the price crashes to $100, why would anyone keep mining? The electricity bill alone would be way more than they'd earn. So they'd just turn off their machines. They'd leave in droves. The network's computing power, its hash rate, would collapse. And let's be real, a network that isn't secure is basically a failed network. Okay, so keeping those 3 doomsday scenarios in mind, the conversation now pivots. It's not about the how anymore. In this moment of total crisis, with Bitcoin trading at $100, the spotlight swings directly onto you. As an investor, you're now staring down a massive, almost existential decision. And this right here lays out the 2 roads you can take. It's a fork in the road, really. On one side, you've got the life awaits gamble. You're betting on a miracle, a community fix, a government changing its mind, some kind of crazy comeback. And on the other side, the concession of defeat. You just accept it's over, the experiment failed, and putting any more money in is just, well, it's just pointless. I love this quote because it just nails the feeling of that first option. At this point, you're not investing in the traditional sense. You are literally buying a lottery ticket. It's a bet fueled by nothing but pure, raw faith. Faith that the community pulls off a miracle or that the politicians have a change of heart. And it's the kind of bet you only make with money you are 100% prepared to say goodbye to forever. Now, that second choice, that leads to something really grim, dead capital. If you decide to buy in, and you're wrong, your money isn't just gone, it's stuck. It becomes useless data sitting on a network nobody uses anymore. There's no one to sell it to, no way to get it back. It is the financial equivalent of a digital ghost town. So this all brings us to the $1 million question, or I guess the $100 question in this case. How do you possibly decide what to do? In a meltdown this big, all the usual tools, financial analysis, you name it, they're all completely useless. Your decision to either buy or run away comes down to one single thing. Why did it collapse in the first place? And this is where the thought experiment really lands. It's pretty clear-cut. If the collapse happened because of a technical failure, like the code itself is fundamentally broken, then the only logical move is to stay away. The tech is dead, it's over.
But if the crash was just caused by panic, maybe some crazy new regulations, while the technology itself is still perfectly fine, well, then you're looking at what the source calls the most violent investment opportunity in history. A chance for insane returns, but only for the absolute bravest, most risk-tolerant capital out there. So when you really get down to it, this whole $100 hypothesis isn't just about money. It forces us to look past the charts, past the price tickers. It's a massive stress test for what we actually